Is the market doomed? Right? Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Outlook. So what a week for investors. What just happened last week? The US markets were rattled on Monday by the DeepSeek dip as investors offloaded tech stocks over valuation concerns. The trigger: Chinese startup DeepSeek introduced a free AI assistant with a reasoning model that rivals OpenAI's GPT-4. According to a technical report, DeepSeek's version 3 model was trained at a cost of just $5.6 million, a fraction of the billions spent by US firms. This has raised concerns about the staggering sums tech giants are pouring into computing infrastructure to support advanced AI development. Nvidia bore the brunt of the market reaction, losing roughly $600 billion in market cap in just a single day. And with tech earnings to continue this week, companies like Alphabet, AMD, Qualcomm, Amazon will have their work cut out for them to convince investors that there is still room to grow. Now, the US markets work to recover from the initial shock, consolidating around the 60-30 to 60-80 range last week. The attempt to break out of the 61-20 resistance fizzled as Trump's self-imposed deadline for the Colombia, Mexico, and China tariffs had investors worried about its potential impact on inflation. Now, while we await the final tariff plan, which is supposed to be on Feb 1, and how the markets will react to it when it opens this week, it's worth considering an economic principle known as Jevons paradox, which means that basically achieving greater efficiency leads to increased demand, and ultimately it will accelerate resource consumption. An example of this is that, right, if gas prices goes down, is it bad for the gas industry? No, because you will use your car more, and ultimately they will buy more gas. With this, we should see the potential for even faster adoption of AI in the coming years. Now, on Wednesday, the FOMC, of course, held interest rates steady as expected, breaking a streak of 3 consecutive cuts. The committee's statement closely monitored last December's, but with slight adjustments, highlighting that the labor market still remains strong and that inflation is somewhat elevated, or in other words, it's still too high for them to consider further rate cuts. During his press conference, Fed Chair Jay Powell emphasized that while the labor market has not been a driver for inflation, they want to see the labor market weaken further. They want to see inflation rate go down further before they make any policy adjustments. So the tone has become more hawkish this time around. Now, meanwhile, back home, GDP numbers were announced on Thursday, coming in at 5.2%, which brought the total full-year GDP growth to 5.6%, which is still below the 6% target of the government. The slowdown in growth was actually on consumer spending, particularly on essential goods, as inflation has affected lower-income households. But Philippine investors were on hold last week as they awaited the index rebalancing last Friday. There was even a sell down before that happened, and what a rebalancing day it was. The PSEI dropped 4% on the last 5 minutes, plunging the markets almost at the 2022 lows here. So why did the markets fall last Friday? Index funds had to sell other equities to make way for the entry of REIT and China Bank into their portfolios. Now look at the adjustments everyone had to make to accommodate these two, right? All of this minus. Why? If you look at nickel and Wilcon, their weight before was only 0.35 and 0.29, and here you have a combined weight of 4% adding into the index. So everybody had to downweight, and this coupled with the lack of buyers to catch the selling caused many big caps to drop sharply. Let's go to the PSEI charts, right? The index breezed through a couple of support points to end the week at 58.62. Now, I want to take a look at the longer term view. If we look at the longer term view, we can see the market has actually been trading along this box range. We are almost close to the box support here at 5,736. And as we get past the rebalancing last Friday, will investors be back on Monday for a bargain hunting spree for a mean reversion trade? Now, most likely, the index might open at around 6,000, pump up to 6,150, resistance here, and then after that, it's anybody's guess. Some people have been saying, if we zoom further out, that the market went nowhere in the past 10 years because look at where we are now. 2014, we are at the same level here. And in a sense, yes, it's true. We go back to what we previously said. No? In a range-bound market, the strategy to play this market is really to buy low and sell high. If you remember, last October, I've been telling everybody during this time, guys, sell your shares, stop slice, buy yourself a nice dinner, enjoy the gains. So the question here really, guys, did you sell? Now that the market is at the other end of the range, where are we in the buy low, sell high cycle? We are at the buy low. My question is, are you now buying? I remember when I started this vlog, it was here around October, November of 2022. Look at what happened in 2023, the whole year. The whole year, the market was going down in 2023. Right? Did we make money that year? Now, if you were watching the vlog as early as those times, before we entered 2023, we explained the economic backdrop in which the market was entering. In 2023, it was a reopening play. China was going to open itself to the world. There was a reopening play here. Interest rates will go up. So what were our stock picks during that time? Banks and Bloomberry. Why? Because Chinese tourists are going to come back, right? So we did not have any real estate picks during that time. And if you look at the banks, the performance of banks in 2023, here's 2023, BDO, BPI for 2023 here, Metrobank. 2023 was not such a good year, but look at the rebound for Metrobank in 2024. And our top pick in 2023 was Bloomberry, right? We bought Bloomberry at 6, we bought more at 7, we bought more at 10. Eventually, it went to 12. We sold all our shares here, and that was the end of a good run. Going back to the PSEI, can you really say that nothing happened? It's really a matter of understanding the circumstances that will help you pick the right stocks that will shine at that particular moment, no, in the market. So, surprise, Chinese New Year sale last Friday. I hope you can all take advantage at this point. You know what? You can pick any stock and it will most likely go up. Now, entering into this week, it will be a busy economic data week, starting with the manufacturing PMI numbers on Monday, inflation rate on Wednesday, unemployment rate on Thursday, and even unemployment rate for the US on Friday. Barring any surprises, right? These numbers may not have material effect on the market the way it is right now. For this week, I want to talk about conviction, right? Which stocks, as an investor, are you willing to bet the house on? Now, I want to show you one of my portfolios. Here, if you look at the average price of certain stocks, REIT 29, JFC 236, CREIT 238, Keeper 190, Metrobank 55, MWC 1898. You already know how old this portfolio is. Now, these are the stocks that I have the highest conviction on right now. And really, guys, you only need 10 to 12 stocks in your portfolio. Put your money on stocks where you have the highest conviction that you're willing to bet the house on. Now, some people will say, buy more so you can diversify and reduce your risk. For me, the word diversification simply means that you're not sure about what you're doing, that you have to buy everything. If you are convinced about a particular stock, why not put all your resources there? So that's conviction. Now, the stocks I sold last year were BDO, BPI, and Plus, because we said that we are going to enter into an environment where rates are going to go down. It has not played well for us so far, but then, because you have conviction, you erase some doubts of whether you made the right decision or not. I'm a member of most investing stock communities in Facebook, and it's pretty common for me to see posts on Facebook asking if they should sell a certain stock. Or, I mean, right now, REIT is at 42, and people are asking, oh, REIT is at 42, should I sell now and buy it later when it goes down? If I may contribute to this conversation, the reason why I think most people don't know if they should sell a stock is because they didn't know why they bought the stock in the first place, or maybe they forgot, right? Because I think that the reason why you want to sell a stock should be aligned with why you bought it in the first place. Now, if I may suggest, the next time you buy a stock, do this. Get a stock index card, right? Now, let me show you why I bought a REIT. I bought a REIT because it is a replacement for rental income. Instead of buying a condo unit, I'll buy a REIT. Because a REIT has less hassles of a physical renting unit. I mean, guys, you'll have tenants that will call you and say, the faucet is leaking, so I have to have maintenance to replace the faucet, the internet's not working, etc. Or the tenant's lease expires, I have to find another tenant. Sometimes there's 1 month where there's no tenant on the unit. So it evens itself out. I get a lower yield here as compared to a physical rental unit, but less the hassles, right? Now, a REIT is a diversified REIT, and I believe in the management's ability to grow the property portfolio. It's an inflation head. My effective yield is 7.5% versus the inflation of 3.2%. Now, the government has favorable tax policies for REITs. It's a defensive play. For me, really, it's about the dividends. So I'm not going to sell a REIT just because it's 42, because whether it's 42, 44, or 46, the dividend yield for me is 7.58 because I bought it at 29.68. And I believe that the dividends will continue to increase over time. The interest right now is 5.75. And if you look at a REIT, REITs will benchmark itself against the interest rate. If it goes down to 38, investors will scoop because it now gives a better yield than the interest rate. So I see a support here at around 38. Will it go down to 36? Highly unlikely. This is going to be a great bargain when it goes to 36, right? Now, the only reason for me to sell is when I know interest rates are going to go significantly up, like I did back in 2022. Or if there's sector weakness, if there's significant portfolio degradation, or if I see better opportunities. But barring that, you hold a REIT. Same for Manila Water. I bought Manila Water because I know that there will be an increase in water tariff, 5.96 pesos per cubic meter, which will be effective on January 1. Of course, investors already bought it before this happened. And you know what? Tariff increases will continue until 2027, even I think until 2028. Their water plants will be coming online this year. Treatment plants will be coming again also online this year. A dividend increase is highly likely. It's giving a dividend increase of 4% right now. Look at the dividend history and the potential for increase. It's a great defensive play. It's a great dividend play. My average price is 18 pesos. My effective yield is 5.95%. Again, benchmarking against interest rate, I'm good. So, the sell case for me, really, let's reevaluate in 2027 or 2028 when tariffs will end. Maybe if there's significant government regulation against Manila Water, market saturation, again, valuation, stuff like that. But right now, I'm very clear on when I will sell Manila Water, if I do, right? Now, JFC, I love the brand, right? I have JFC. We've been trading JFC in a range, buy low, sell high. The range trade here is buy price 220 or lower, buy price 250, possible target price 274 or 280. We've been trading this for 2 years, but I've been also holding JFC for a long time. I love the brand. Tim Ho Wan, Chowking, Mang Inasal. I hate Coffee Bean and Tea Leaf. But consumer recovery, this year, it's going to be a bullish consumer sector this year, improving cash flow. Their EPS is 8 pesos per share. 13% year-on-year growth in the EPS in the last 5 years. I mean, PE ratio so cheap, 26.8. My lookout really here is just to look out for the financials, monitor the recent acquisitions, see if they make sense, and sometimes look at commodity prices and how it affects the bottom line. But if you believe in a company, JFC I think is a strong brand. Their global expansion is impressive, so I'll hold on to that until I see otherwise. Now, there are some stocks that you want to enter on a swing trade, maybe on a technical basis. Keeper Holdings, we see a bullish move for Keeper, and the buy criteria here is, okay, let's buy the dip when it goes down to the 20 or the 50 EMA, and then we only sell if it goes to the 200 EMA. Very clear why you want to sell. And so far, there was no reason to sell. There's no need to ask Facebook because you've already set that criteria. But in the process of looking at Keeper, look at the profit growth. 20% profit growth. Recently, they bought Booz Online. Their dividend, when I saw it, oh wow, 4.17%. My average price is 190, gives me an effective yield of 5.26. So, I initiated positions on Keeper for the long term and not to range trade. So, it can change that way. SMPH, I'm at a loss for SMPH. But you know what? The fundamentals haven't changed. They are still making good profit. I'm still bullish on the consumer sector because I think SMPH is a consumer stock. It's not a real estate stock because 60% of its revenue is coming from malls. So as the mall business is still positive, SMPH is still a positive play for me even if the price is going down. The buy zones are 23.50 and 21.15. It just hit the first buy zone. So I'll buy more this Monday. PE ratio 16 versus 33. 10-year PE ratio, very cheap. EPS is actually double its 20-year average. So really, it's just a matter of time before this stock bounces. A simple play on TEL can also be initiated, right? I mean, some people enter TEL because of the dividends. But you can also enter TEL because of a swing trade, right? If you bought here because this is looking like an inverse head and shoulders, so we can initiate a buy at around 315 on the bounce. You have your sell criteria here if it breaks down 1277. You have your sell here when it hits target price, or a hold, or maybe a partial sell, and then just monitor for a trading stop. Now, we measured here because usually the height of the inverse head and shoulders here corresponds to the height of the upside. So we have a measured target here of around 1456. So it's very clear why you entered. It's just a swing play. It's not dividend play. It is clear why you are exiting it. So there's no confusion. If you know why you bought a stock, deciding when to sell becomes easier. The problem I see on social media is that many people buy stocks due to FOMO because someone said it was a great pick. Then you buy the stock. When the stock moves up or down, you are left wondering, should I sell? You don't know why. If you turn to social media for answers, should I sell? You will get as many arguments for selling as you will for holding it. In the end, you're back to square one, and really the decision is yours to make. Using social media as part of your research, that's fine. But before you buy a stock, make sure you list down why you are buying it, why you like the stock. Take time to understand why you're investing in it. Right? Write down its business, its catalyst for growth, what it does, is it profitable. Keep track of this information and revisit your notes regularly. Because, I mean, here's the reality. You buy a stock now, 2 or 3 months down the line, you will forget why you bought it if you did not take note. And then, one bearish comment on Facebook will send you into a panic, and it will tempt you to hit that sell button. So having a clear investment thesis will help you stay confident in your decisions. In this time of bargains in the PSEI, know why you're buying into a stock and take advantage, right? And be clear, take notes so that 2 or 3 months down the line, you can ask yourself confidently if you should sell or not. Right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.